This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Going to give you an update on the stock market today. I'm doing this Thursday as of the close for Friday morning, just so you're aware. I'm going to go through the market conditions and talk about the current volatility, the sentiment, and then I'm going to go through the time frames, individual time frames, and show the trend and momentum conditions as well. So let's go ahead and get going. I do like to focus in on the S&P or the spider. Just give us a pretty good idea of kind of what's going on, generally speaking, for the market. Every now and again, I will mix in the Qs and the DIA, the diamonds as well. But just suffice it to say, the NASDAQ and then the Qs are trading much weaker than the S&P, and the diamonds or the Dow Jones is trading much stronger than the S&P right now, and is in a stronger position, I should say. But the key thing I want to bring up here is that the stocks that make up the biggest portions of the S&P and the NASDAQ are the ones under the most pressure. Stocks like Apple and Microsoft and Google and Amazon and Tesla, all these stocks that are big representations, they're big weightings, they're really under a lot of pressure right now. Going to make it difficult for the market to go up, even if a lot of stocks look okay. So you want to keep that in mind. And the other thing we got to keep in mind is that when these stocks are under this kind of pressure, we should be on the lookout for. We should be a little bit more worried about the general market, I guess is a simple way to put it. So let's just start real quick. I always work my way up. And the reason is that I want to see if we get into a position where we're overbought and people are negative. Oversold and people are negative. If we have that, then these both will be in the positive camp. If the market's overbought and people are bullish, then we'll be in this camp. It really doesn't matter what's going on up here. If we have this condition in place, we could look for either a rally. If these two are like this, we could be looking for a rally and a downtrend even. Or in this case, we could be looking at a rally and an uptrend. Or right now, it would be we got this position here where we were overbought and people are bullish in a bear market, that would be incredibly bearish, right? So we want to always just kind of be on the lookout. Right now, we're not dramatically oversold. We're working our way down there. I'd love to see this drop down a little bit more, get down under this 30 level. And in the process of doing that, we got the number of bulls minus the bears at 3%, meaning there's 37% bullish people, right? And there's 34% bearish. So there's the difference is 3%. I'd really like to see this get down into the negative camp, have more bears than bulls, and get this down under 30, and then we could have another decent trading opportunity to the upside. In terms of the volatility, we're still below a declining moving average on the daily chart, believe it or not. It feels like we've got a lot of volatility, but in the reality, in the numbers, the last week or two, because we had some the holidays in there and some quiet days, the volatility is still dropping. Now, that is usually a precursor. When we get this tight price action, it's a precursor to some kind of volatility in one way or another. So you want to be aware that we could be getting ready for some kind of volatility move. Now, the weekly is actually below its moving average, but that moving average is flat. So that's considered to be a neutral situation in the volatility. Once again, we're at a very critical point here. I mean, if we start making a move to the downside, then I would fully expect this to turn back up and switch this trend around. If in fact we make a minor move to the downside or something like that and then turn back around, we could see this continuing to drop and this to roll over. And if we have all these lines kind of going down, to me that reduces the risk in the overall market. So right now there's some critical things going on in the momentum conditions. The trend and the momentum. So we have to watch out, really be really careful right now. So those are those conditions. Let's go ahead and look at the individual time frames. So I know this is considered a neutral trend, but we have to keep in mind we are below a declining 18-month. And my subscribers hear this over and over again, right? I mean, this This is not a good situation for the market. When we're below a declining 18-month, it's highly risky, okay, whenever that happens. Now, when we're below a declining 18-month and we're below a declining 18-week, now we're in what I call a no-buy zone. I would not be buying stocks right now unless I'm trading, right? If I want to trade. But if I'm looking at anything that I'm looking to play for, say, the next, 3 months or something like that, I think you got to be really careful as long as this is below its 18-week line. Really, really careful, right? So we're below a declining 18-week, we're below a declining 18-month, and we're below a declining 18-day. So if you notice what happened, we had a pretty decent move to the downside, and then we consolidated back, and we actually, look at what happened yesterday. We came really close, so the last couple days came really close to hitting the 18-day. That line is declining. So what are we thinking? So let's just look at this. We could have a move to the downside, and then we could have a 3 to 5 bar rally, right? Or we could have a move to the downside and just consolidate sideways while this is continuing to drop. And then if we get some kind of a trend continuation signal here, that would be bearish, right? Just like if we got a trend continuation signal in this kind of formation where we go down and we rally up. Well, this is the same concept. It's so weak, I guess, it hasn't been able to rally. It's been going sideways. So, and this was what we were, people were looking at this as the Santa Claus rally, right? We were supposed to get a rally during this phase. And typically you do, and it couldn't really get that going. So again, as I've been saying to my subscribers, I'm really kind of worried right now. I am hoping or expecting this to get maybe a little bit of a rally first, but based on the way this is trading right now, I think we have to respect the negative action because we have the down move, we've gone sideways, we've caught up with the 18-day, we have essentially formed another pinch here, and look at the trend line formation that has taken place on the hourly chart. So let's zoom in on the hourly for a second because what's taken place here during this rally is not impressive, okay? I mean, this is what the ADX did during that period. This was this rally, and we had this gap up that lasted all of about 10, 15 minutes, and then it gave it up right away. That actually helped green DI here, and then you had another test of that area, but in reality, you never got the ADX to cross above 25 during the rally phase. During the decline phase, you had a strong move to the downside based on the ADX, right? So what happened is the MACD kind of came up into the zero line area and it's been hovering. This was the first time it got up there, and then it came back down, and now we kind of have this sort of little double top. It actually is making a slightly higher high, while this is making, well, I guess it's about the same. It's not a reverse divergence, but it's not bullish because we had two chances to get above the zero line, and now we're crossing back down below. So with this configuration and this configuration and the way this is set up with the trend line, I do think you could take the trend line break. I mean, obviously, every time I bring this up, you could always take this trade or you could wait for the lower pivot high to follow, right? But because this is tight, the moving averages are tight to the trend line, this is really not a bad risk-reward trade. You could put this on a break and put a stop up above here. Because it's tight, it should have follow through right away if it breaks down. Now, here's the problem with this. It looks all great right now, and I do this on a Thursday night, so I have no idea what the futures are doing. When you guys are watching this, you already know what the futures are doing. So it's possible the futures could be causing the market to open way down here. It's also possible the market could be way up here. We know this is the trend line. If it gaps up and then comes back down through the trend line, that would be amazingly bearish. Okay, so that would be an operative sell signal if we got that. If we gap down here, we do not want to short the gap down. Okay, I would not short a gap down here. I'm going to do, so people who have my course and anyone who's interested in my course, I've got the foundational course out there. I'm working on a swing trading course. And a part of that, a section in there is going to be all about handling these opening gaps. And so when I get a gap down like this, we need a gap. We need confirmation that this isn't just a gap and snap, right? A gap where we gap down and we get, it's like a novice gap where people sell out on the open based on the way it closed the prior day and they're all scared, and then it just turns on a dime. So what we'd actually want to see happen is if it gaps down, see it fill in a little bit to some degree in the morning, and then come back down through the open or through the low of the day. And if we have that, then we'd have an operative sell signal here based on the trend line break. All right. So hopefully it won't have a big move up or down, but I wanted to make sure I spent a few minutes explaining that. I do think this configuration is bearish enough to take the trend line break, especially because we're tight to the trend line. So I'll put it to you this way. It's tight to the moving average. So let's say the moving average, if we're down away from the moving average breaking the trend line, then I'm not as attracted to it. But if you notice, we just touched the moving average and they're really tight together. So we're not going to be oversold taking out this low. So you just got to be careful about any type of gaps and how to handle that. Again, I'm going to spend more time on that in the course. And just so you know, as I add in the swing trading component, it's still going to be $100 a year. It all stays the same. It's all a part of the course, or what I call the school. So that's where we stand right now. We're below a declining 18-month, below declining 18-week, but below a declining 18-day, and we've worked off the oversold condition, and now we're sitting on the trend line. Now, let me put it to you this way. If we do have a bad day or two in here, or we gap down and then we turn back around, if we can get this thing back above the 18-week and put some pressure on this trend line, it's very possible that this isn't going to follow through to the downside. But I think if that's going to happen, we're going to need to see better price action or some type of climatic activity in Tesla and Amazon, Google. These stocks probably need to have some kind of a interim climax with some volume. I want you guys to all go and look at Meta, META, at its bottom. Look at the size of the volume at the low. Okay, we don't really have that condition in place in those big names yet. I think we're going to need to see that if we're going to make a really important interim bottom here. So anyway, that's what I'm watching for. Go ahead and post any questions or comments. Thanks.